Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Brian, welcome to the show. How are you?
I'm doing awesome, Sarah. How are you doing?
Good. We've attended many networking events together. I know you've also been a longtime supporter of many of the things that we do, and I wanted to bring you on because you also have an incredible story. You're also a real estate investor, very successful one as well. Just to share your story and some insights and things that you're seeing. So before we get started, why don't you give us a 30,000-foot view of who Brian Gordon is?
Sure. So first off, thanks for having me on. So I purchased my first investment property probably about 12 years ago. And like most investors, I kind of fell into it. And from there, I would say I really became an investor probably about maybe 6 or 7 years ago. And really what I mean by that is that's when I really was intentional. That's when I joined real estate groups and, tried to connect with like-minded people and really focused on market fundamentals versus just, trying to invest, right? Really, again, being thoughtful and putting a system behind what I was doing. And, again, like many investors, I started with duplexes, moved to triplexes. I have some short-term rentals, and I'm in the process of transitioning now to multifamily. So it's been an amazing time. It's pretty turbulent right now, but still a lot of opportunities. So that's a little bit about me.
Awesome. Yeah. 12 years ago, I think we almost started together. I think I'm at 13 years as well. So, back then things were quite different than they were today, but, there's challenges and there's opportunities in every market cycle. And 20 years from now, even today will seem like another great opportunity because it is about time in the market. You talked about, duplexes, triplexes, starting in multifamily. Do you think that there is a path that an investor might want to take, or is it just going to be based on where we're at right now with the economy and what makes sense in today's world? But and the reason I'm asking is oftentimes people will start with the smaller things and then they get into bigger deals over time.
Yeah. So great question. So first off, I think with most investors, I tell, newbies that you really want to think about, what are your goals? What are you trying to achieve? And then build your strategy around that. But I think to your latter comment, you have to obviously take into consideration where the market is, right? What worked 18 months ago definitely doesn't work now in many cases. So it has to be really, I think, a combination of what are your goals and what currently works in the market that you're thinking about.
Yeah,
because again, I started with duplex conversions, right? I banged out several and they just don't work in my market right now, right? So you need to pivot.
Absolutely. Pivoting is definitely up there with what we need to do as the economy, the rates are high, the economy is a little bit turbulent, this government's questionable. There's lots of different moving parts. With somebody that's been around for 12 years, I mean, you've probably seen some ups and downs. Like this is probably, a different market cycle than maybe you and I have seen in our last 12 to 13 years, but we've still seen some ups and downs. And so what challenges are you facing in your investing journey in a down or unpredictable market like we're in today that maybe other people are also facing, and what insights can you provide?
Sure. So I think one of the things that I keep hearing is interest rates, right? We know interest rates have just about tripled within 12 to 18 months. And even though I expected interest rates to increase, but not nearly to the extent that it did, nor at the speed that it did. So, to some degree, I won't say I was unprepared, but I was definitely not expecting this. So some of my challenges right now are that, some of my properties aren't cash flowing the way they were. Some of them are in a negative cash flow situation. So what I've been doing over the past 6 to 8 months is really looking at, again, what are my goals? What properties still fit into my portfolio and my long-term goals. And I sold one of my properties. Actually, that same property I chatted about that I purchased 12 years ago was an older condo in Scarborough. And it was a worst property in my portfolio. So a situation came up and I was able to sell it. So really, again, looking hard at my portfolio, what makes sense? What should I keep? Where can I increase revenue? Where can I decrease expenses? And really just focus on the things that I can control and not watch the news. I find the news is very depressing and you can't control what happens out there. So really, again, focusing on, where you can add value in your own portfolio.
Yeah, no, that's a great point and very valuable insight as well. And, decreasing expenses or increasing the income. Have you pivoted to any shorter term rental strategies, like midterms, short terms? Or are you going into student rentals? Like, what are you doing from an income standpoint that you found has worked well for you?
So I'm in the process of actually turning over 2 of my tenants. So I'm going to renovate the units, and one of them will be a short-term rental. And depending on how that one does, I'll probably do the same with the other one. So I know that will increase cash flow because it's in a great location. It's uptown Toronto at Yonge and Finch. So I know it will do well. At least speaking with a couple of people told me that it will do very well as a short-term rental. So I'm looking at that. Like I said, I offloaded one of my properties, and I'm also fortunate or unfortunate, I do have a full-time job. And so I do have a pretty good income. So that also helps with cash flow. But again, really just looking at opportunities. I'm also raising capital as well. I do have access to home equity line of credits and so on, but I still want to be very, very conservative. So I'm raising funds as well. So just doing a little bit of everything to make sure that, not only can I hopefully thrive over the next 18 months, but take advantage of some opportunities as well.
Absolutely. I mean, there's, definitely the prices are better, the terms are better, negotiating with sellers that are more motivated. That was not something that we experienced, right? 2 years ago when interest rates were low at 2%, 2.5%. I remember, if anybody was selling something, like it would be gone in multiple offers with no conditions. And I think a lot of people got in over their heads with those types of deals and now are trying to scramble because unfortunately, I think a lot of people thought that everything was just going to keep going up and up and up. And I think over time, in the very long term, it will. But from a short-term standpoint, a lot of people bought not looking at cash flow, looking at equity and expecting that to be their ticket to freedom. And to me, it's a combination. It's a combination of equity and a combination of cash flow. And, we see that the cash flow has dropped tremendously for everybody that's had a portfolio. But I also, like you mentioned, I think there's some great opportunity to buy today that we didn't have 2 years ago. What are some of your goals from an acquisition standpoint?
So right now I'm still in my growth phase. My goal is to ultimately essentially do what you did in 5 years, is to quit my full-time job and just transition to real estate full-time. I really don't want to work more than 20 hours a week. And so that is what my long-term goal is, which is one of the reasons why I also started transitioning to multifamily. I mean, among other reasons, but so that's the long-term, or I should say midterm goal, is to quit my day job and just focus on real estate 100%. And with that, I think a combination of multifamily and, flips will get me there. And private lending. I love private lending.
Yeah. So let's talk about that. How do you decide how much you're going to go into from a private lending standpoint, like a percentage of your portfolio, or is it based on, if you have something in the works or not? Like, because I mean, a lot of people are also sitting on cash, right? And they're like, this inflation is eating away the cash that's just sitting in the bank. And sometimes private lending is a solution or part of the overall portfolio. Like, what are your thoughts on how to go about that?
So it's a great question. And I've been lending my funds for maybe 7 or 8 years, right? Again, I have a day job. I've had multiple jobs. So I lend registered funds. And I had a chat with actually Gary Hibbert last year at your event at the Have a Cake and Eat It Too. And he told me how he essentially pivoted to private lending. So I started asking him questions about, how much of his portfolio is made up of private lending and so on. And that really got me thinking that I should really focus, not really, I shouldn't say focus, but at least make sure that private lending is a portion of my overall income. And so my goal is to have 25% of my cash flow come from private lending, right? For everyone, it's going to be a little different, but that's the plan for me.
Okay. And you mentioned registered funds. So these are like tax-free savings accounts, RSPs, RESPs. And if you have a full-time job, I'm not going to make assumptions, but when I used to have a full-time job, they used to match. So you would get a match up to a certain percentage. Some good companies do that. now, and that's, a way to build up your RSPs as an example. But, maybe share some insights on that with us, if you don't mind.
Sure. So because again, I've been working for the past 20 years. When I've left some of my previous employers, I have a choice to either keep the RSPs with the employer or take it with me. And I've always opted to take it with me, and then it's converted to what's called a LIRA, locked-in registered account. So I would just take the account, move it to my own institution, move it over to Olympia Trust, who's basically the trustee, and then you can lend. Canadian law allows you to put housing or to lend funds on housing through an RSP. So, again, I've been doing that for a number of years, and I always use my registered funds, because my own fund, whether it's a HELOC or again, just my own personal funds, I will use that to invest in my own deals.
Mm-hmm.
But you can invest your own registered funds in your own deals. So I use that to lend.
Yeah, absolutely. So Olympia Trust, there used to be another company called Community Trust, I believe it was called, and they were just Ontario based, and they actually are no longer in that business. So I think for Ontario, it is just Olympia Trust, and there might be like a
Canadian Western
Trust,
Bank as well.
Yeah, in in Western Canada, but I think most people use Olympia Trust. And I'll tell you, banks will not tell you about this. Your financial advisor will probably not tell you about this, because they make money from commissions of you investing into their funds. So it is important to educate yourself. And listening to this, you're definitely on the right track. People are on the right track doing that. But that's not something that is necessarily common knowledge, that you could actually take registered funds, move them over to a company called Olympia Trust, and then loan them out as a first or second mortgage.
Yeah. A lot of people don't know that. And after speaking to many investors, seasoned investors like yourself, like Gary, like many others, I've asked them, how did you transition to full-time employment? And yes, some of them will say they've managed to create cash flows through their properties, but a lot of them also, a portion of their cash flow comes from private lending, and that's kind of when the light bulb went off for me about a year or so ago. And so I think it's really important, to your point, educate yourself on, a number of different strategies. You really shouldn't put all your eggs in one basket, in my opinion. I love real estate. Real estate's, the key to my wealth, but also look at other options to diversify your income. And again, for me, after real estate, it's private lending.
Mm-hmm, absolutely. Now, the only thing I would just say with if you've got registered funds is that they had the cash flow, right? Or correct me if I'm wrong, but the cash flow from RSPs goes back into your RSP. So it's not like you can cash it out. I mean, you could, but you're going to be taxed on it, right? So if you're looking to keep it in the RSP, then that cash flow payouts from lending it to somebody else, you can't lend it to yourself or a relative that's blood or marriage related. It's got to be arm's length. But that cash flow has to go back into the RSP.
Exactly. And that's why, again, too, it depends on, you really need to think about what are your goals. So again, for me, I work full-time, my wife works full-time, so we don't need the cash. And so we're fine having all that, all the income from the private mortgage go right back into our RSP. And then, when I hit 50 or 55, I can start withdrawing from it. So until then, it's just compounding, and I can make money, doing that. But to your point, you're right. You ideally don't want to pull out the funds now, especially if you have another job, because you'll get taxed, again.
If you're in a high paying job, you'll be really taxed in a really high tax bracket.
Exactly. But you can still, lend funds outside of an RSP or outside of a registered funds, and, get that cash flow right away. Again, just really depends on what your goals are and what you're trying to achieve, for sure.
Yeah. And I think there's still a way to do it with your tax-free savings accounts. And that's a little bit different than your RSP and that kind of stuff. But I mean, it's a great opportunity. Back in the day when Community Trust was there, I used them. But it's, I think Olympia Trust is a great company. It's just, you've got to do your research, on that. And then the beauty of it is you can create the terms, you can create your rates that you want, you can create, the time you want to lend it out for. I mean, obviously you can loan it through a company and a mortgage broker that does this, but you could also do it privately through lawyers, through Community Trust. So there's lots of ways that you could do that. So you're mentioning that you guys are both working full-time. How do you manage real estate, your portfolio, your acquisitions, the property management, and full-time work?
So I'm fortunate enough that my day job, I'm a senior manager. I won't say for which company, but I'm a senior manager for a company. And I'm fortunate enough to be pretty flexible, but it's still pretty demanding. So because I'm still in my growth phase as well, and I do have 2 kids, all of my properties except one, I have a property manager. So I outsource property management. So that frees up a ton of time. And then that allows me to focus on, the kids, my full-time job, as well as acquisitions. So that again, that really frees up my time. So I'm able to spend, the bulk of my time growing and obviously hanging out with the kids.
So more on the acquisition side versus the operations and being bogged down by the day-to-day stuff.
Exactly. And it's not a perfect formula because sure, you could probably, or I could probably manage my properties better. But again, I'm okay suffering a little bit, which will allow me to grow in the long term. Right.
Mm-hmm. Yeah, absolutely. Like there's pros and cons, right? And you got to do what makes sense for you at the time that you're in it. And property management, I mean, there's pros and cons, right, to self-managing and or hiring a property manager. And I think at some point though, when you have many units, whether you hire it out or you hire it in, right? Because internally you could also hire somebody to manage that. You're probably not going to be doing it by yourself with multiple units. Like I think if you've got, 10, 20, it's still manageable. But I think, at some point, if you're really scaling and you're going into bigger multifamily, you're going to want to hire it out to somebody that's capable, that has done it and doing it full time, or you're going to want to maybe hire an admin / operations person for your company / property manager, assistant, or whatever you call them to help with that piece.
Yeah, absolutely agree. And I really don't like the property management business, right? So for me, I'm a relationship person. So I mean, I could do the job, but it's not the part where I want to spend my time. I also don't enjoy it. I really love the numbers, the acquisition, the relationships with brokers and, events and so on. So I prefer to focus my time on that as well.
So 12 years is a long time in the grand scheme of things, because I think a lot of people that I speak to anyways have started in the last 5 years. And 12 years is staying power. 12 years, I think is you get a lot of ups and you get a lot of downs along the way. But what made you originally decide to go into real estate back then?
So for whatever reason, maybe it's through my mom or my mom and dad, they always talked about real estate, that real estate's important. You need to buy real estate. And at a really, really young age, I, always would watch those MLS. They had those back, and I'm going to age myself a little bit, but on TV, the real estate agents would advertise on TV and you would see the listings, and I would stay up late at night watching the listings. I know, so corny, but I always knew, I guess, again, through my mom, that real estate was the key. At the time, I didn't know how or what I needed to do, but I knew it was the key. So, I purchased my first home at 20 or 21, and I just kept on growing from there. And it's worked out obviously really well. The market's been very kind to everyone, except for the past 18 months or so. But I think that's really what gave me that push and that confidence to get into real estate.
Many investors' parents, I feel, are like the opposite, right? They say, oh my God, you're going to get calls at 3 a.m. You're going to have the tenants that trash your house, or what are you, crazy? You're going to lose all your and it's interesting because I mean, my parents were always very supportive. They're not investors per se, but when I'm like, hey, I want to buy some properties, they're like, that's awesome, which I was very lucky to have that support. Were your parents entrepreneurs? Were they investors? What made them really push you and say, this is a great opportunity?
They weren't entrepreneur. Well, my mom's actually an entrepreneur now. She retired. She was a nurse. She retired, and then she started a Airbnb and an entertainment business in Jamaica. But so she always had, I guess, that entrepreneurial spirit. And then just knowing that there was a lot of opportunity and I guess a way to grow wealth in Canada, that real estate was that opportunity. So I guess it's a combination of her entrepreneurial spirit. My dad was a bit more risk averse, but my mom always encouraged us to go for it. And like your parents, my mom and dad has always been supportive.
Okay. All right. Very cool. I throughout the years, I know we've had similar timelines in a sense, but throughout the years, our teams or expert teams, right? You kind of tweak along the way, and then you realize the ones that really understand the business, mortgage brokers, right? That work for investors versus going directly to the bank or working with realtors that understand the types of investments. What are some things that you learned along the way from a power team standpoint, or maybe some mistakes or challenges that you had that you changed and tweaked over the years?
Sure. So I think outside of doing your market analytics, so what market to invest in, what neighborhood, etc., your power team is probably the most important part of your real estate business. And I definitely made, I won't say a ton of mistakes, but I made a number of mistakes, especially with my first duplex conversion. I hired a friend who was a contractor, and he's never completed a legal secondary suite before. He's done basement apartments, and it was an absolute disaster. A project that should have taken 2 to 3 months ended up taking about 10 months. And we're talking a simple duplex conversion. And it was my first go at it. So it was, a lot of sleepless nights, a lot of worrying. And from then I realized that don't hire your friends or family unless they specialize in that specific area that you need. So always hire an expert that does whatever you want them to do. So if you're trying to finish a legal basement apartment, they should have completed, maybe 5 to 10 that year, and ideally even specialize in the market that you want that duplex conversion completed in. So, I think the moral of the story is hire an expert that's credible, ideally get some references, and don't just hire someone because they're a friend, or even don't hire someone just because, they have a good, big social media following as well, right? Like, you really need to do your own homework.
Mm-hmm. So somebody that's then starting out or going into a new market altogether, like what is like the first step to even trying to figure out who the experts are in that area?
I tell people, and what really changed my life from an investment standpoint is joining a high value real estate investment club. That's where everything really came together for me about 6 or 7 years ago. And once I joined that real estate club, I was able to gain knowledge. I was able to network, build relationships with people that were in the industry, so agents, brokers, etc. I learned how to ask the right questions, because a lot of times as a rookie, you don't even know what questions to ask, right? Mm-hmm. And speaking to people, being around those like-minded people, I was able to, figure out what kind of questions should I ask, who are the major players in the industry, and then, slowly become more comfortable with asking those questions and networking. So for me, I tell all rookies, first thing, join a high value real estate investment club, and then start your journey from there.
Mm-hmm. Yeah, absolutely. Great insights and advice. So now that we're going into, I think the start of some turbulence. Even though we look at like all the rate increases, I still personally don't think we've seen the rates stay high, what the aftermath will really look like. What are you fearful about, but what are you also excited about? And what are you specifically going to be maybe doing for the next 12 months?
So I'm very excited about the opportunities. I've already started seeing them. I'm closing on myself and my partner are closing on an 11 unit in Brantford next week. And we got, is it like a 65% VTB, a second. So basically we're going up to 85%, right? And that would not have happened 2 years ago, right? So there's a ton of opportunities. So we're looking at those opportunities. Again, I'm raising cash. And to what you said earlier, making sure that I have the staying power first and foremost, making sure that I'm not over leveraged, and then just make sure I have the cash to take advantage of those opportunities down the road. Because I do think we've more or less capped out with interest rate hikes. Sure, we might have another one, maybe two, but I think we're more or less at the top. But I don't think we've really felt the after effects yet, and that probably won't happen for another 6 to 12 months. So I think there's going to be a ton of opportunities.
I think so too. I think it's going to be a matter. I think it's going to be disproportionate to the values of properties along the way too, versus the stuff that's over $1 million or the stuff that's 500-ish and the stuff that's below. I think it'll all be proportionate. But really, ultimately, I think, and this is just guesstimating, But as people's interest rates are going from like 2% of the fixed rates, the ones that have not investors per se, I mean, maybe some investors are in that category, but people that have these expensive properties that are on fixed incomes that all of a sudden they're going from like $2,000 a month to $4,000 or $5,000 a month of mortgage. Once those rates come through, like I actually don't know what's going to happen. I think they're going to either have to sell or the banks are going to have to create 40-year amortizations or do something, because I don't think they want to repossess the properties. I mean, I know there's different ideas and thoughts that out there, but I think that's when there's going to be some tremendous opportunity. But again, we don't know how quickly they're going to reduce them or how much more they're going to increase rates. But all I know is right now, I think it's the calm before the storm.
Yeah, totally agree, which is why I've been telling a lot of investors, don't wait. If you need to readjust your portfolio, do it now. If you feel that you need to sell and that's your worst case scenario, then sell, but make sure that you have that staying power and don't wait until things get bad before you take action.
Yeah. And like you're looking at multifamily yourself. And I think that likely, again, this is just my guess and feel free to challenge it or add your comments and thoughts, but I think my guess is what's going to make the most sense for the next little bit is going to be utilizing CMHC with multifamily, and potentially doing some conversions of 5 or more units and being able to use the MLI program that CMHC has. But I think that may be the play that many investors are going to be considering, because there's a little bit more, in my opinion, a little bit more certainty of what that exit might look like.
Yeah, I totally agree. And what I like about that space too is that there aren't a lot of investors playing in that space, right? You have maybe a handful that are doing the conversions similar to what you guys are doing right now. So there's less competition, less people are looking for those churches to convert to, 10, 12 units versus, your typical detached bungalow, right? Where you have your retail buyer, you have your beginning investor. So I just think there's a lot of opportunity with that program and that space in general.
Mm-hmm. Are there other strategies that you're also maybe bullish about in the next coming 12 to 24 months?
I also like the Caribbean. So
Okay.
myself and my couple partners, we purchased some land in Jamaica last year,
Nice.
and we're going to be developing it next year. And there's just so opportunities. There's a ton of development happening. The economy is doing really well. Tourism is doing extremely well. So I'm taking my first foray into developing. So excited and nervous about that. But I think there's a lot of opportunities as well outside of Canada.
Yeah, that is awesome. So can I ask, like, do you have to purchase in full cash or do they have financing options in the Caribbean where you're looking?
You can purchase, so you can do both. You can purchase cash, of course, which is what we did, but you can also finance, and typically they'll do a 70% loan to value. And they ideally like to see that you have some equity down there. And we have a property down there, a family home that's free and clear. So I can always leverage that, and I will leverage that to start the build, but you can get financing.
Okay. Can I ask, like, from a price point standpoint, like what, I guess what you're looking at and just like what that actually looks from, like, are we talking about hundreds of thousands or like, what price point is, we're in Jamaica and what price point are people maybe expecting?
Sure. So it's between a town called Lucy and Negril. Most people are familiar with Negril, which is about a 55-minute ride from the Montego Bay Airport. It's close to 3 major hotels, so very, very popular area. The strategy is I'll do a combination of short-term rentals and executive rentals to the senior managers at the hotels.
Nice.
Because they have more money, they get paid in US dollars, so they have that cash flow to spend a little extra on on a place that's you won't be a place that's, I guess, more luxurious than your average place in Jamaica. So it's $150 a square foot to build. We're going to build 4 condos and 2 2-bedroom townhouses. The property is a half an acre, so that city will allow you to only build that many units. But yeah, we're super excited, and we're probably looking at around $750,000 US dollars. Mm-hmm. So again, we'll borrow money from the bank to do that. But
from the bank in Jamaica?
Yeah, for the bank in Jamaica. So I have a relationship with Jamaica National Bank, and I also have a relationship with Scotiabank. They have a huge presence down there as well.
Mm-hmm.
And it's just about who I'll get the most favorable financing.
Well, how much was the land that you purchased?
When we bought it, we paid 60,000 US, and the lot right now, there's a lot beside ours that's selling for about 120,000 US.
Okay.
So we were pretty lucky in that we got it at a pretty good time.
So what about, finding your team down there? Like you have family that helps down there, or did you have to make a trip and, connect with people? Like, how did you go about that?
So my mom, unfortunately, my mom's very well connected down there. So I was there for the past, I don't know, 3 times in the past 6 months, meeting with the local town, city planner, draftsperson, engineers, etc. So my mom has been able to basically get all the contacts for me, and then it's just a matter of me interviewing them, again, asking some the right questions. It's development, but it's more or less the same, but with some nuances. So just really trying to figure out what those nuances are. Just like in most Caribbean countries, things move way slower, so you have to get used to that.
Yeah.
But
sure.
I've been lucky because my mom's been able to connect me with 90% of the contacts to be able to build my power team.
That's awesome. Now, are you going to have her be the feet on the street, or are you planning to travel there every so often to check up on the progress?
Yeah, she'll be the boots on the ground. The property from her house is probably about a 7-minute drive, so
Okay.
it's not too bad for her to drive there maybe twice a week, take some pictures, videos, send it back, and I'll continue to go down there quarterly at least. And again, I'm doing it with 2 other partners, so we'll take turns going down and managing the site.
Amazing. So with the other 2 partners, like, what is your role in that business or partnership, and what do they bring to the table?
So I'm the only real estate investor out of the group.
Mm-hmm.
And so I'm really taking the charge and putting together the team, managing the site, and I'll probably end up doing 90% of the work. Now the other 2 investors are related to me, and it's typically with my first project, that if I don't have experience in, I don't raise money because I want to make sure I'm comfortable with what I'm doing. And so we're doing an equal split right down the middle, 1/3, 1/3, 1/3. And again, I'll probably end up doing 90% of the work, but it's my first foray into it. So I'm comfortable doing that.
Okay. All right. Very cool. Well, it sounds like an exciting project, and from an Airbnb standpoint or a short-term, midterm, let us know when it's ready. I'm sure many people are maybe thinking of taking a little trip, to the Caribbean at some point.
Awesome. Will do.
Awesome. So the next part of the podcast, Brian, is our lightning round. I'm going to ask you 5 questions. You're going to give me the first answer that comes to mind. Are you ready to play?
Let's do it.
Okay. So here's question number 1. Was your favorite real estate investing book?
Probably, if I have to say a real estate book, it's probably, I'd say, Don Campbell's. I think it's Canadian Real Estate Investor or Investment. But I typically read books that are focused around more on mindset and so on. So I'd say my favorite book overall is Think and Grow Rich. But yeah.
Nice. I know Harry, I think, well, we have Harry as a common connection, but I've been like listening to that like over as a replay,
You and me both.
Yeah, awesome. All right, number 2, not real estate specific necessarily, but do you have a favorite podcast?
Yes, I do. Real Estate Espresso podcast by Victor Menashe.
Okay, awesome. Is that American, Canadian?
Canadian. He's based in Ottawa, but he does a ton of investments in Ottawa and the US. And his podcast is typically 7 minutes Monday to Friday, and then he does a weekend special where he'll do like 50 minutes. So it's bite size and a ton of high quality information.
Okay, very cool. Number 3, what do you do for fun?
Travel. I love traveling. Have a huge passion for travel. I climbed Kilimanjaro a couple months ago, so I did that, and yeah, just love adventure traveling.
Okay, amazing. Is your wife also on board with all the adventures?
Not that type of adventure. She loves traveling, but she's more laid back, the beach and walks and restaurants like I am too. I love to eat. But yeah, she's not that adventurous.
No worries. That's a big accomplishment. Congrats on that.
Thank you.
How much training did it take?
I trained for about 2 months. Probably should have trained longer, but it was a bit of a last minute decision. And but it worked out really well. Like, it was the best trip of my life. by far.
Amazing. Number 4, if you lost all your money and all your assets, how would you start again?
I would, because I have a bit of a reputation and credibility, I think it'd be very easy for me to start. I'd start with investing again. I would go straight into multifamily and church conversions, and that, basically, multifamily, commercial, etc.
Okay, awesome. Final question. If somebody has $50,000, they want to get started in some capacity or another, how would you recommend they spend that 50 grand?
First off, again, I would say join a real estate investment group, one that you're comfortable with, one that has high quality content. I would say start there and, potentially get a mentor. But I would say, again, get an understanding of the real estate space, build your power team, and then potentially bring in partners, etc. Because $50,000 nowadays won't get you far. But, look at getting partners through family, friends, etc.
Okay. All right. Thanks for playing the lightning round, Brian. Where can people reach out, find out more about you, connect with you? What's the best spot?
Sure. So the best place is to connect with me is on Instagram at acquiring_wisdom. You'll be able to find me there.
Amazing. Thank you so much, Brian, for being on the show, and congrats on the success. I'm excited to hear more about your Jamaica developments as well.
Thank you. Again, glad to be here, and hopefully I was able to add value to your listeners.
Thanks, Brian.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?